Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what I expect for next week. This is going to be a bit of an abbreviated one. I've got family in town, so I'm going to make this one a little bit briefer than usual. But without further ado, let's go to the charts. Starting out as always with the S&P 500. So the S&P fell as expected, down about 1% for the week. It would almost seem as if I were psychic after my whole Mag 7 speech last week and how overvalued they were. And then literally like the next day, NVIDIA fell by 15% or something. That was simply luck and just good timing. Not any psychic abilities on my end, that's for sure. Anyways, it looks like the S&P 500 is probably going to go down again this week. I would be pretty surprised if it doesn't at least touch this 50-day moving average, which is at 5,990. The dollar is up 1% for the week. I thought this would continue going down. It didn't. On Monday, put in a nice little reversal bar there and then started climbing. So we have this immediate 20-day moving average right above it right here. Did break through on the RSI here, so I'm kind of 50-50 on this one. It looks to me like it's more likely that it's going to go up. So maybe I'll give it 55% to the upside, 45 to the downside. But if it does go down, the immediate support is going to be right here at the 50 moving average, which is at 107.72. And story of the week, along with platinum and palladium, is gold. Gold is up 2% for the week. So we hit a new all-time high. 2,862 was the all-time high that we hit on Friday. So really exciting. Closed the week at 28.35. So this little white line right here that we had drawn as the all-time high, we can move that back right up there to 28.62. Now, I would expect gold to kind of like settle out a little bit next week and probably ironically come back down here to the 28.01 where we had this line at. That's going to now act as support. So pretty exciting. I'm not sure really what drove this. I read possible tariffs being thrown around, shortage on the LBMA, and then basically New York was trying to buy some before they were afraid that any tariffs were going to go through. I think that's all going to level out. I don't think that the paper market is falling apart and we're finally going to get rid of the COMEX. I know everyone watching this would love for that to happen, but you'll know when it does because gold will go from 2,800 up to 5,000 in like 2 days. That's not happening. So I think the paper market is still intact and they're able to trade at a ratio of 500 to 1 or whatever it is. All right, and GDX is up 2.7% for the week, so pretty fantastic. Shot up with the with gold reaching new all-time highs, but I think we got a long way to go in these miners here, like we're talking about with Peter Greenwich. I mean, these things are nowhere near where they were on their all-time highs here back in 2011. And we are at new all-time highs with gold, and it is still just down in the dumps. But I don't see any buys right now for any of these gold stocks. We want to wait for this to get retraced. If anything, if you want to take a little profits, if you got some down here, I mean, you're up, what is that, 25% or something? I'm just doing this in my head, 20%, 17. Take a little profits, kind of high RSI. Same thing for GDXJ, showing a similar pattern coming right up. See this trend line, these parallel trend lines that we had drawn right here. Now it's tapping on that. That's going to be resistance. So probably have a little bit of correction along with gold. But good to see that the miners are working as gold shoots up. Also next week we have Michael Oliver on the show, back on the show of Momentum Structural Analysis. And looking forward to that. Make sure you get your questions in for Michael. Just go under the community tab and there'll be a post right there for him to submit questions for Michael Oliver. And silver is up 3.5% for the week. So we're right on this one that it went up last week, or that it was going to go up, and it did. And what's really encouraging about this one, I drew a red line right here at 32. Basically, the closer you get to green is the better buy it is, right? The closer you get to red, the worse it is. But the fact that we closed above $32 an ounce for the week and for the month is I don't want that to be lost on anyone here. When you go out to the weekly and you stretch it all out, there's a lot of resistance or support, depending if you're above or below it, right at $32. So the fact that we closed above that is awesome. And not only that, but it closed out the month as well. So pretty cool, looking really good for silver. I think there's a little more upside in this thing yet. So I was really expecting us to come back down, blow through 30 and then probably come down into 28 and back up the truck moment. I think for me in silver would be around 26.50. But if Jeff Clark is correct and the all-in sustaining cost of a lot of these miners is around 28 to 30, we're pretty much right there. So I don't know that it's going to go much below there, and if it does, it won't be for long at all. But, if you don't have any silver, like any physical silver or anything, maybe just start dollar cost averaging in now. But these are going to be your physical purchase lines right here, and the further it goes down, obviously, the better it is, because it's cheaper. All right, SIL, the silver miners ETF, up 2.4% for the week. So odd that silver is up more than the miners, but it was. So I think the miners are going to play a little bit of catch up. Got a nice little bit of support right here on the 200 moving average. It closed above it, so that's good. Don't really see a whole lot here with volume, maybe slightly increasing volume. But, it'll probably correct back down to this 200 moving average. What has me a little bit worried on this, where's my little paintbrush tool? There we go. Bit of kind of a flaggish pattern, not in the right direction for this one. So it wouldn't surprise me if this one corrects back down. SILJ, same kind of thing. See, we got kind of like maybe a flaggish pattern here. It's not exact, and I don't like that it came here and then drop back down. There's like this little, I don't even know what, just a giant gap right there. But I think there is a little bit of caution warranted here in the silver equity space. And copper, paging Dr. Copper, down 1% for the week. So we're right on this one in that it went down. We've got the 200-day moving average above it, so that's not fantastic. That will continue to pressure copper down. Hopefully it will be caught by this rising trend line and just continue on up, but I really got a feeling here that we're going to see some downside in a coming recession for copper. And COP.U, okay, so Sprott's Physical Copper Trust, the discount isn't quite as good as it was last week. We're up to 13.4% discount, so not the amazing 22% discount on this physical fund, but it's still something. I would prefer to have a limit order down around $7, but that's simply because I am thrifty. The missus would call me cheap. I say I'm thrifty. But yeah, like this one a lot. I think that this is going to be a nice place to store some cash. I'm doing air quotes here, cash, and do it in the form of copper. COPX, the Copper Miners ETF. Okay, so buying copper on weakness here on the yellow line. So you had your weakness there on Tuesday, limit order at $38, and it hit. We're within a few pennies of it hitting again. So I think it is almost certain that it will hit $38. So if you want some Copper Miners ETF, which should be everyone watching this show, that's your first order. Next one is going to be $36.25. And if we see weakness in the copper sector going into the recession, this will continue to get cheaper. Lifestyle companies. We have a class coming up in the Rural Classroom Plus on lifestyle companies. I'm going to tell you a quick, what is a lifestyle company? It is actually, Rick did a video on it. I'm going to share this one with you. This is fantastic. So Lifestyle Companies by Douglas Silver. This is Doug Silver right here. He basically invented the royalty model for precious metals companies. So, things like Wheaton Precious Metals, like that. This guy was in the ground floor of that. This is how Rick describes a lifestyle company.
Lifestyle companies is industry nomenclature for a public company that exists really for the benefit of the management team rather than for the benefit of society or the benefit of the shareholders. these companies are characterized by very high salaries and very high general and administrative expenses. They also can be characterized, as I think Doug will say, by people who conduct most of their exploration within 5 miles of a paved highway, preferably in warm locales during the winter, and preferably in northern locales, scenic locales during the summer. Very often in Canada, exploration programs around lifestyle companies seem to be coincident with areas that offer very good fishing or very good hunting.
Okay, so lifestyle companies. These people are starting up their companies so that they can get paid to go fish and go hunt. I had an experience with a lifestyle company. I was at one of these seminars and I was listening to their presentation and I was sold. I thought the CEO is awesome. I went up to my room to study the company for an hour and a half so I could formulate some intelligent questions for an interview. And I came back down to find him at his booth and I couldn't find him. And so then I went to the ladies at the front desk and they said, oh yeah, he lost his Prada sunglasses and he was really bummed he couldn't find them. And so he took the rest of the day off and went to the pool. I'm like, this is the CEO of a company who at breakfast was preaching how he needed more money to, get more drill holes and drill this thing out. And, we're going to make millions. And then first of all, why did he have Prada sunglasses? Okay, maybe I'll give him a hall pass on that. Maybe it was a gift. But then why did he take the rest of the day off before lunch to go to the pool? Okay, that's a lifestyle company. And unless you go to these seminars or, you have inside knowledge, you're not going to know that, well, here we have a class, lifestyle companies put on by Rick and Doug and Adrian Day, Albert Liu, and I will be there emceeing and taking your questions to ask these experts. Now, if you want in and we register here, you'll see that it costs $29, but watch this. If you scroll down here and you want to attend for free, okay, you click this and you will get a free 2-month trial of the Rule Classroom Plus, and you get to attend the class for free. So how's that for a deal, right? Now, if you don't like the Rule Classroom Plus, then simply cancel and you don't owe a dime and you get to attend this class for free and we will all have fun and it will be amazing and there will be butterflies and ice cream. So hope to see you there. I will put a link down in the pinned comment below. It'll say lifestyle companies. And I'm really looking forward to this. I'm looking forward to being a part of it and emceeing. And I hope to see you guys there. All righty. Uranium is exactly flat for the week. So I thought this would go up last week and I couldn't be more delighted to be wrong because check out what happened. So we did have a blip here on Monday. It just shot down and then came back up and the spot price started the week at 71.15 and ended the week at 71.15 and that was it. But look at what happened with the Sprott Physical Uranium Trust. Overall down 2.4% for the week. But look what happened on what day was that? Monday. Shot all the way down here, got down to in the low 15s. I picked it up for 15.14, which almost looks like the exact bottom, but pretty darn close to it. Anyhow, some massive selling. I'm not sure what happened, but it pretty quickly retraced. So I made a buck inside of a few days on each share. Pretty cool. Hopefully you did too. Not sure what happened. If anyone knows, put it in the show notes or in the comments below. URNM also gave us a nice little opportunity here. So you guys remember this green trend line that I've had drawn forever, and there's nothing real scientific about it other than me just connecting dots. And it dropped below that. So that was another nice little entry into there. Got it sub $40. And sometimes you get opportunities. URNJ, you could have done the same thing with that. So if you guys had your limit order there on this yellow line that we've had drawn forever for 1850, unfortunately you got within 2 pennies of that. I seem to have a habit of doing this. It's getting just a little bit cheaper than it actually ends up being, but close enough for government work. I think it'll probably get back down there and you'll get another shot. So 1850 for the first limit order and then 1750 for the one after that. URNM is down 7.3% for the week, and URNJ is down 8.6% for the week. So just massive drop in the uranium equities, and it gave you an opportunity. Take advantage of that. And crude oil went down as expected, 2.9% to the downside. So broke through the 200-day moving average. Looks like the 50 moving average is starting to catch it, but I think we still got some pretty good downside for this. I saw some things being thrown around about tariffs and being thrown around in oil and Canadian natural gas. We'll see how that irons out, if it's empty threats or if it's actually going to happen. But yeah, we'll see. So anyways, I think we still got more downside left for oil. Next week, XLE got hammered here, down 4%. Most of that happening on Friday. I'm not sure what happened here other than maybe because Exxon got sold off a little bit, but now down below the 200 and the 50-day moving average. So not fantastic there, but I would expect that we're probably going to retrace back down. Not next week, but I think we'll probably get another chance at $83. And XOM, ExxonMobil, same kind of thing. Very volatile on Friday. Settled the week at 106.83, down 1.7% for the week. We'll probably get another shot at 104, 105, and maybe even get lucky and get down to $100. We've got their dividend coming up. It's almost 4%. And natural gas. So bias last week was up. Could not have been more wrong. Natural gas last week was basically $4 and now it's $3. So it lost 24.4%. Yeah, I was wrong on that first thing Monday morning. So this trend line that we had drawn right here didn't mean squat. It blew right through that. The next thing to catch this is really price action of where it is now. So around, there's a bit of price action around $3, so that could catch it. But I think what's really going to catch this thing is this rising 200-day moving average, which right now is at $2.68. And I know that just by looking right up here at $2.68. And that's kind of the next real technical thing that's going to catch this, I believe. Devon Energy down 5.2% for the week here. So if you're looking to get into some American natural gas, look no further than Devon Energy. And your opportunity, I believe, will be coming soon, and it'll be coming in the form of a 61.8% retracement, which would put it at, I'm just doing this real quick here. We'll call it $33.50. How's that? So somewhere between $33.50 and $34.50, I think, should be your ballpark zone. So basically now it's like $34.10. But I would be looking for a technical entry here. Like I want to see a bounce right here on the 61.8, double bottom and up, and then that's your sweet spot right there for Devon Energy. All right, and Paydo, looks like you're going to get another crack at this one, and your first limit order is going to want to be at $10.65. It looks like it is almost certainly going to get there, and we can tell because see how the price action was really volatile, hit the 200-day moving average, shot down, and it just creates this long wick with the open and close down here. That means it's infinitely more likely that it's going lower on Monday than it's going higher. So, if I had to say on Monday, what is this doing? Is it going down or up? 80% of the time here, it's going down. And so $10.65 is your first limit order. After that, $9.75. Birchcliff Energy is down 7.5% for the week. So pretty volatile week for Birchcliff. They lowered their dividend here. So here you'll see we had 7 cents kind of like going on, and then now it's 2 cents. So I'm not sure what happened here. If anyone knows, put it in the comments below. Are they buying back shares? What maybe just with weakness in natural gas in general, they've finally not been able to pay out like they normally have. And coal. Thermal coal up 1.2% for the week. Met coal is down 0.5% for the week. So still trading in the ranges that Matt Warder told us about. and the coal ETF. So this one, we're now up to 10.5 million in assets under management, but they issued a bunch more shares. So now we've got another 50,000 shares. So we were at, 60,000 shares. We were at 470,000 shares for like ever. And then now we're at 530,000. So they issued another 60,000 shares or so it's pretty much the same price as it was like up there. But I think this is a fine time to buy. And BTU Peabody is down 6.2% for the week. So missed our option there, which we would have sold like a few days later. Not that I'm still bitter about that, but I must be because I keep talking about it on the show. Waiting for it to come back down here. I'm going to be looking at 1775 for another possible call. Looks like this call is going to expire worthless. So I guess in hindsight, I should have just sold it right here for a slight break even or loss. It's easy to see straight when you're looking backwards. But yeah, I guess 6 out of 7 isn't bad for this one. Anyhow, I think that's going to be, if we come in for like a double bottom right here, I think that's going to be a pretty sweet entry spot. And what I'll do next time is probably just go further out and make sure it expires later. And platinum, look at that chart. Isn't that beautiful, especially when you're invested in it? Platinum up 7.4% for the week. So I don't see a whole lot of technical stuff on this other than we've had this white line here drawn forever. That's at 1,050. And that's kind of just loosely drawn, but there's a lot of price action around there. So I think it's relevant. And then if we move out to the weekly here, you can draw trend lines anywhere. You all you need to do is connect 3 points, So I was playing around with this for a while, drawing a bunch of different trend lines. And I think this is probably the best one. There is another one from here, and then these two don't quite hit it, so I guess I could draw it here just so you guys can see. But it basically like that. So that could be considered another one for another possible breakout. But suffice it to say that we have a lot of resistance right above platinum here. But if we noticeably break out, move up to like, 1150, even 1125, I would consider that a decent breakout. If we close next week above that, then I think we might be finally having our moment in platinum, which we've been waiting on for, I don't know, two and a half or 3 years. Okay, and palladium up 6.2% for the week. I don't see as much of a pattern with this one other than I think we're just putting in a bottoming pattern right here, which we're finally going to break out of here eventually. And the big resistance here for palladium that I see is at 1250. So on the daily chart, you can see here we're up above the 200-day moving average. And so just looking fantastic, broke through the 400-day moving average. Now, usually when stuff moves up, vertical like this, it's not too sustainable. And check out the RSI here. This is not something to buy now. Like your moments are back here when it was touching this green line and we're talking about it. Now you're riding the wave, right? You got in back here and now you're happy because you were so smart, right? That now is not the time to chase or to buy. And same especially with palladium or with platinum. Now is not the time to buy. Don't chase these green candles here. Like your RSI is 71. That's the time to be taking profits, not to be chasing. All right, and nickel futures down 3.1% for the week, so kind of around this green line where we drew it there. Closed the week at around 15,000. And NIKL, so it did not come in for a double bottom like we're hoping. Well, it did, but then it just broke down, so it doesn't count. But basically, yeah, boom, double bottom, and then broke. So getting pretty low RSI here. RSI is at 28. And I'm not sure how much you can really go by that on this fund, but it does just go to show how terrible we are at timing nickel miners. And hopefully this sector is going to turn around. I got to believe that eventually the Chinese aren't going to be able to pay off the Indonesian politicians, and they're going to have to get their act together. And when that happens, any other nickel miner that exists that's not in Indonesia is absolutely going to kill it. But until it does, they're just going to be down in the dumps like they are now. So I just arbitrarily moved this green line down because it was up there before, and now the price is obviously getting lower. But How low will it go? I have no idea, but I think that nickel will turn around. We just got to be in it before it does. And pick the favorite metals and mining producers fund, PICK ETF. Still think any good buys around 35, around where we are now. Stink bids down here around 33, but middle of the road RSI, so I don't see any buys. And Bitcoin, so Bitcoin is down 1.8% for the week. I don't really see anything in this that, this to me is kind of like a risk-on trade. You know, it's trading a bit more like a tech stock. I think we're going to have a pretty massive washout in this thing when the recession hits. I would love to see Bitcoin double during a recession when people are terrified of losing purchasing power in their currency, but I don't think it will. I think gold will, and I think a lot of money is going to rotate out of these crypto coins and into real things, the first of which being real money. Alrighty, well, I hope you guys got something out of that. Thanks for being here, and I hope to see you over at the lifestyle companies. That'll be on February 5th, so register for free. Try out your free 2-month trial in the Rule Classroom Plus, and then you'll actually get to see what I'm raving about every time on this show. All right, love you guys. Thanks for always being here. Have yourself a great rest of the day, and be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.